Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I was looking through, there's some questions that were put on the website. I'm going to read through this one and let you guys know that my approach, it just isn't technical analysis. It's a combination of things that I want in alignment before I even use technical analysis. And my technical analysis is a validation metric. It isn't the decision making thing because it has a pattern. I don't look for patterns just to look for patterns. The how can I say this? I'm trying to set a record for running, but every single time I try to set a record, I've got a tailwind behind me that's helping me push me. And I know that there's certain limitations for tailwinds for records, but I'm always running with the tailwind. That's exactly what I'm doing with my technical analysis. I'm always looking at charts with a certain paradigm or perspective that's jaded to some way. I'm not looking at technical analysis only to look at the patterns. The patterns, man. So here I'll touch on a couple of things here before I start getting into it. So, and I'll give you some examples. So this is on my Finding Value website. This is just about me, right? And I talk about the three major pillars to investing. It includes ratios, market conditions, and technical analysis. It's not just technical analysis, it's also ratios and market conditions. What I am doing is not, because I know a lot of people want to learn technical analysis. I just want to make sure that they understand what my approach is. It's not just technical analysis. What I am trying to do and what I'm trying to validate is money flows. Money flows. I mean, that is it. You could say, Andy, if you knew where the money was flowing, what would you do? I'd say, well, I'd front run. That's what we're doing. We're front running all of the people who are about to reallocate money into other sectors. We're just front running that reallocation. So that's the entire thesis, and that's basically the entire thesis of the entire channel is front running when money moves around in the system. And that's the only way that I know how you can make money. I mean, you can make, quote, money and get taxed and whatever and have a little gain. What I mean is like purchasing power gains, where I can buy more of another asset. So all we're doing is front running money flows, the change of money flows. And the way that I do that, the entire three pillars of investing deals with ratios, market conditions, and technical analysis. Why is it those three? Why those three? Well, ratios tell us where money is at and where it isn't. It can also tell us the relative valuation change against two assets or multiple assets if you do a whole bunch of different ratios. So, what that is telling us is it's gauging where the money is and isn't. Market conditions is telling us when that money will flow. So, we can say, all right, the money is over in stocks. Why is it over in stocks? Because we have the market conditions that forced all that money into stocks. We had a stronger dollar. Stronger dollar means that money from other currencies will be attracted to dollar denominated assets, and then they jump into stocks and bonds. That's what low interest rates are. Now, the interest rates moving is going to rotate all that money. We can see that using ratios and technical analysis. We're going to front run where the money's going. That's the whole point of all of this. We're front running money flows. So when I use technical analysis, I'm validating, and I have here technical analysis. It's right here. Technical analysis validates that the ratios and market conditions are changing favorably for investments. It can monitor the progress of ratio movements and market conditions. It can also identify potential investment opportunities based off known technical analysis patterns, which is human behavior that occur in history, and the size of the potential moves using fractals. And all I'm doing is tying these three pillars together to create a story of where money is flowing and where it has flowed. It's all about money flows. Like all of investing, that's all it is. It's all about money flows. So, can you take what I'm doing and just use one of the three pillars and be successful? My answer is probably not. You can't, I mean, you can use technical analysis, it will help you. It's a tool to help you to identify money flows. At least that's the way that I'm using it. But can you be successful? Could you apply technical analysis to biotechnology companies? You can, but I think your success rate will be much lower than what I'm doing. Much, much, much lower. Why would it be much lower? Because you don't have the money. You don't know if the money's flowing in or out necessarily. And that's why I limit myself to certain areas. That's why I do commodities and technology. I don't try to do news-based information type movements. I don't do the geopolitical garbage stuff. What I look for are the structural underpinnings of the market. Basically, the way that I view it is these things have to happen. They have to happen, irrespective of a war. We already had tightness in an oil market. We already had tightness in an energy market with natural gas and nuclear and all that stuff. If something comes up, it's just going to exacerbate it. That's it. The money flows were already coming. Now governments just need an excuse. They just blame it on something. Oh yeah, it's the Russian war, the Ukraine crisis. That's why it's going up so much. No, it's not. The structural underpinnings are all there. Now, when I look at this and I pull out other things, the market conditions. The market conditions, are not just it's not just related to liquidity, but you're also looking at the supply demand balances. If there's imbalances in the market and they're coming ahead of us, I don't think anything's going to stop that. I mean, I know a lot of people say, well, demand could go down. Okay, demand comes back, what, a few years later? The only thing you're sacrificing is time in that time frame. You're sacrificing some time and waiting for it to develop. If something happens where it's a yes/no deal, like in a biotech releasing information, like there's no way I would touch any of those. Like that is an entire sector that I have written off as never touch, and I never will. There's no advantage to gain there. So we're front running money flows, and this is what I use to do it. Technical analysis. When I go and I look and do my technical analysis, when I look at ratios, when I look at things breaking out, and I'll give an example. So we have the XAU to goal ratio because that's breaking out right now. Here's XAU to goal ratio. There's your technical analysis. You've got a downtrend line. You broke that. You come up, consolidated above the resistance line, and now break it higher again. There it is. We back out. The ratio is very cheap. It means that gold mining companies are cheap to gold. And that we're about to break a huge, very important technical analysis resistance level to the upside. That's great for mining stocks. But why am I even looking at XAU to gold? Why does this even matter? Well, because all the money is rotated over into stocks and bonds. With increasing interest rates and high inflation, the money's going to rotate into here based off history. So my technical analysis, I'm not just using technical analysis to use technical analysis. I'm tying this whole thing together. I'm not using one piece of information. I'm not doing what Garrett Soloway was doing of, I'll just project this line up on oil. I'm looking at inventory levels. I'm looking at how much money's in the system. I'm looking at how this money rotates and where that money's going to rotate to. I am front running the entire market. That's our goal. I'm positioning. I'm playing chess here. And I'm using technical analysis as a tool to validate my moves. Why is that important? Why am I using technical analysis to validate my moves? Because price action and volume, how much volume is being traded, that is validating that my thesis or what I'm thinking is right. I don't know any other way to validate. I'm using charts and data to validate if I'm right or wrong. And the only way I know how to do that is technical analysis. Now, you can try this, but you can go and use technical analysis patterns, use all the different patterns and all that, and see how reliable it is knowing nothing about the stock at all. I would never do that. I would always understand the structural underpinnings of the market and then use it to validate. So, I mean, I know under inflationary periods, looking at history, that platinum generally outperforms the other metals during those time frames. So I'm looking at all of these charts, knowing that information, thinking that platinum, which is broken out of this big pattern to the upside, is about to make a move higher. We're up 2650, which is 2.6%, and it's greater than all the other ones. Now, it hasn't played out yet, but I still know, and I'm still looking at all of these charts, the ratios and whatnot, looking at platinum to outperform. And the ratios are cheap. I know that the money isn't there. And when I look, we're still on top of patterns. That's exactly when I buy. I've been loading into it. Platinum's outperforming palladium. Platinum's outperforming silver on the dailies. Had a little bit of a detour. And then silver, I think, or gold's outperforming silver at this. Where is it? Yeah, it is. Gold's outperforming silver. It's at the resistance line. I still think this will blow down. But one thing I want to make sure that everybody understands, though, it's I'm not just using technical analysis. It's way deeper than that. I'm using where money's at, where it's going to flow based off market conditions. The market conditions are what is setting my viewpoint on the markets. Supply demand fundamentals, the where money is and isn't, which is ratios, and then how those things are interacting with each other using interest rates. And once you have that figured out, then the technical analysis comes in to validate the thesis. Are the ones that I'm expecting to move up, platinum, outperforming the others? Are they sitting on top of patterns? Is the gold mining companies outperforming gold itself? If it is, we're coming to a bull market in mining companies, which is pretty rare. Because if you get it right, you make a whole bunch of money. If you get it wrong, you just continually lose money because they only work during very short periods of time in history. So I just wanted to touch on that. Another question that somebody had, you know what? I'll do another video on it. But just keep in mind that I don't use just technical analysis. It doesn't apply to everything. I'm using an entire framework that I'm working everything in. Just be cognizant of it. Be aware. I am thinking about doing a training session in technical analysis on the Finding Value website, using probably a Zoom call or something like that. It will be available for Platinum members. If you join the Platinum membership, I will schedule a technical analysis training. It will be completely free to you if you're a Platinum membership, and I'll schedule it within probably the next week or two for the training. So let me know. If you're interested. I'll get that scheduled. Become a Platinum member on the website. The description links below. It's www.finding-value.com. We can do a technical analysis thing. Just keep in mind that it doesn't apply to absolutely everything. I'm using this in a specific way to validate certain things. And we can go over that in the training. All right, guys. We'll catch you next time. This is Finding Value.